we as Africans, we cannot conform to the realities of Europe or of the US. Our needs are very different. And so we need to have rules that address our needs so that we can facilitate the development of the continent. If you look at the foreign reserves of all the central banks across Africa, it's a total of $450 billion. Now, $450 billion is the foreign reserves, and that means that this is monies that belong to African nations, African savers, that are lodged in accounts in Switzerland, in London, in New York. And then you ask yourself, well, what is that money doing? And that $450 billion, unfortunately, is buying US Treasury bonds, is buying UK bonds, it's buying Euro bonds on international markets. But that funding is not really serving the necessities of the growth of the continent, right? So financial sovereignty is the definition of what I believe and what our regulators and our central banks will be thinking about, I'm sure, in the coming years, is that how do we mobilize, or how do we really mobilize African capital for African opportunities? Because this is the continent that needs the capital. And ultimately, is it really so hard to consider that out of the $450 billion that are lying in reserves for all the African nations outside of the continent, is it impossible to believe that maybe 20 billion of the 400 billion can sort of be routed back towards opportunities across Africa? So be it for infrastructure, be it for energy, be it for financing, either commercial banks that then on-lend into the market. So we all, I think, as Africans, we need to think about what are the rules that we write within our central bank governance, the rules that we look and we impose on our commercial banks. Are these rules and are these sort of mindsets geared to promote African growth and continental growth? So it's maybe a deeper question that I'm putting out there, but that I believe at some point we'll come to the realization that the rules for Africa need to be different, because we as Africans, we cannot conform to the realities of Europe or of the US. Our needs are very different. And so we need to have rules that address our needs so that we can facilitate the development of the continent. So I think it's a deeper subject that needs to be debated. And so many people have great points of view on this topic, but we just hope that there is some thought in that direction about mobilizing capital on the continent. If you look in essence to what we understand as the agreement, or the critical minerals agreement that's taking place between the US DRC and going on the US DRC investment summit that took place in Washington a few weeks ago, if you look at the narrative of the story, it's really about attracting investment into the country. So the DRC has always been a country that's been open for business, that's been welcoming of all investors to come into the country and to invest. And we see this trend continuing. What perhaps this partnership or this agreement will do is that we may potentially see a lot more US investors looking or taking an interest in the DRC and projecting themselves to invest into this market. At least this is what we hope for. And I think our role at Rawbank is really to facilitate bringing in the capital, giving advice to the investors, showing them, giving them the explanations and the comfort for them to believe that the capital is safe in the country. And we see our role really as advisors, and at some point when investments materialize is how we can mobilize financing to help these investments really come to fruition, create the employment, create the jobs that go along with these investments. So we see ourselves very much as a facilitator and as a conduit for these investments to come in. And it's really great because it reinforces what DRC has been saying for a long time, is that we really are open for business. We welcome capital to come into the country. We welcome investment. And history shows that those who have already come to the DRC and have invested are today reaping the benefits of those investments. And profitability across companies are very strong. The margins are very good. So we hope to encourage more investors, and we have to just play our part, ensuring that the investors who are coming have the best experience possible through their projects and their businesses. The Lobito Corridor project is a very exciting project, and without the DRC, you can't have a Lobito Corridor. As many of you know, today the DRC has exported well over 2.5 million tons of copper, and we still hold 70% of the world's cobalt reserves. So when we look 5 years forward and we look at projections, we expect that the copper production will grow significantly. There's a lot of new projects that are coming on stream. We would not be surprised that we reach 2030 with 3.5 or 4 million tons of copper production. And the question of the Lobito corridor is the logistic corridor of where these minerals, how these minerals get to international markets. And Rawbank has its role to play in enabling the investment that's coming in, securing the investment that's coming in, providing capital to develop the logistic corridor. And the logistical corridor has so many components to it, right? So you have the rail networks, you have the road networks, you have the question about how to create energy transmission into the Katanga province in order for the mining companies to increase their production. You have questions on all of the suppliers that go around the mining companies so that they can feed into the mines, and then that will create increased production. So Rawbank sees itself as a very integral player, albeit we're not the largest player, but we have a small role to play in order to mobilize the capital, in order to secure the investments that are made around the Lobito corridor project. Indeed, we've had a very good result last year, and we believe this result in 2025 will be even stronger. And maybe I can explain the context of the results. It's really on a very strong economic growth that's taking place in the Democratic Republic of Congo, the DRC. And Rawbank is really able to mobilize resources, mobilize capital, finance the economy, which is helping us grow our revenues and in turn grow the balance sheet of the bank. Whether this is the time to expand outside of the DRC, Rawbank has never been close to any opportunities, so we've always been open to look at opportunities in the sub-region. However, our main focus and our raison d'être, if I can, is really about financing the DRC. So Rawbank likes to positioning itself as raising international capital to help propel the development, be it infrastructure, SME financing, large corporate financing, project expansions within the DRC. So we still look at the DRC as a place of great and tremendous opportunity where capital is short. So Rawbank will always remain true to its mission of mobilizing capital towards the DRC and deploying it to help the economic development in the country. However, if across neighboring countries we see a very interesting opportunity, we might capitalize on that, but we will never change our core mission, which remains the DRC. The question of competition, if you look at the context of the DRC, we remain a country that is short on capital and very rich in opportunities. So we very much welcome banks from the sub-region, either acquiring banks in the DRC or mobilizing capital for the DRC, because our mission is to expand and really increase the size of the pie and increase the size of the financial resources that are available for the Congo. Today, the question is not so much on whether we're competition, it's how do we service all the opportunities that we have in front of us. And with so much opportunity that every bank has a place, and there's just so much to go around for all the banks to be profitable, for all the banks to grow their balance sheets, and to continue to finance the projects that the DRC needs very well. And you know what's most important as well is that the DRC cannot survive as an island on its own. You know, we have to learn to adopt best practices from our neighboring countries. So it's always great to learn from Kenyan banks. It's great to learn from Nigerian banks. It's great to sort of see what strategies they're implementing in our markets, and for us to adapt to those strategies and to sort of continue to remain up to date, to continue to remain competitive, and ultimately offering the best service that we can for our customers. So it's very welcome to have more financial players in the DRC, and I think it's very healthy for the financial industry.